Hello friends, I am Mrs. Sinahomani. In this video, we going to see national income and its measurement. First, we go talk about introduction of national income. National income is the money value of all final goods and services produced within the economy over a period of time. National income consists of a collection of different types of goods and services of different types. Since these goods are measured in different physical units, it is not possible to add them together. Thus, we cannot state the national income is so many millions of meters of cloth. So, CSO, Central Statistical Organization, is given task of estimating the national income of India and publishes its estimates in its publication Estimates of National Income. Then measurement of national income. Production of goods and services generate income, and income give rise to demand for goods and services. Demand give rise to expenditure, and expenditure give further rise to production of goods and services. There is a circular flow of production, income and expenditure. And then on the basis of these follows, national income can be analyzed at three ways. First, as a flow of goods and services. Then next one, as a flow of national incomes. And last, we see the flow of expenditure on goods and services. Then measuring national income and national product and national income. There are two ways to analyze the national product and national income. What is the first one? Household and for business firms. So that the economy consists two sectors, namely household and business. In the upper top of this figure, the resources such as land, capital, labor, and entrepreneurial ability flow from household business firms, as indicated by the arrow marks. In opposite direction to this, money flows from business firm to the household as factors payment such as rent, wages, interest, and profits. Next, we see methods of measuring national income. Net output or value added method or product method. Then another method is factor income or income method. Then next one, expenditure method. First, we have to see product method. In this method, national income is measured as a flow of goods and services. We calculate money value of all final goods and services produced in an economy during a year. Then final goods here refers to these goods which are directly consumed and not used in further production. The product approach measuring national income involves adding up the value of all final goods and services produced in the country during a year. Here we focus on various sectors of the economy and add up all their production during the year. The main sector whose production value is added up, first one is agriculture, manufacturing and construction, and transport and communication, banking, and lastly administration and defense. Then next method is the value added method. To avoid the problem of double counting, we can see the value added method in which not the whole value of a commodity but value addition at each stage of production is calculated, and these are summed up to get national income. In order to avoid double counting in a production method, the value addition can be followed. This difference between the value of output and input at each stage the production is called value addition. Next method is measuring income method. The income method measures national income from the side of payment made to the primary factors of production in the form of rent, wages, interest, and profit for their productive services in an accounting year. Income approach is another alternative way of computing national income. This method is also called factor income method, a factor share method, income distributed method, or a national income by distributive shares method. This method seeks to measure national income at the space of distribution. In the production process is an economy. The factors of production are engaged by the enterprises. They are paid money income for their participation in the production. The payment received by the factors and paid by the enterprises are wages, rent, interest, and profit. National income thus may be defined as the sum of wages, rent, interest, and profit received or accrued to the factors of production in lieu of their services in the production of goods. And next we see expenditure method. It also